It's a comprehensive case study in clubbing of income. Let's get started. During the previous year 2018-19, the following transactions occurred in respect of Mr. A. Mr. A had a fixed deposit of Rs 5 lakh in Bank of India. He instructed the bank to credit the interest on the deposit at 9% from 1/4/2018 to 31/3/2019 to the savings bank account of Mr. B, who is son of his brother, to help him in his education. So in this case, Mr. A has transferred the income from the asset to another person, that is Mr. B. So it should be taxed in the hands of Mr. A only because Mr. B is not earning this income out of his asset. So here there is a transfer of income without transfer of asset. Whenever there is a transfer of income without transfer of asset, it will be taxed in the hands of the transferor only. Okay, appropriate provision we'll discuss when we take up the solution. Next, Mr. A holds 75% share in a partnership firm. So this is a concern where he has substantial interest. Mrs. A received a commission of 25,000 from the firm for promoting the sales of the firm. Mrs. A possesses no technical or professional qualification. So if any sum is received from a firm where one person is having a significant interest, and if the sum is received by the spouse of that person, then that will be considered, or that income will be clubbed in the hands of the person who is having substantial interest. Exception is if that money is received for professional or technical skill or qualification. In this case, A received it from the firm where, Mrs. A. Mrs. A received it from the firm where Mr. A has significant interest, that is, he is holding 75% share, and Mrs. A is not possessing any technical or professional qualification. So for that reason, it will be clubbed in the hands of Mr. A only. Mr. A gifted a flat to Mrs. A on April 1, 2018. During the previous year 2018-19, Mrs. A's income from house property was Rs 52,000. So this is a case where there is a transfer of property without adequate consideration or no consideration. So any income derived will be taxed in the hands of transferor only. Mr. A gifted Rs 2 lakh to his minor sign, who invested the same in a business. So he gifted. So section 56 subsection 2 clause 10 has not been attracted, being a relative, but if there is any income he is going to derive from that investment, it will be clubbed in the hands of Mr. A only. So this 20,000 will be clubbed in the hands of Mr. A. And Mr. A's minor son derived an income of Rs 20,000 through a business activity involving application of skill and talent. It will not be clubbed, it will be assessed only in the hands of Mr. A's minor son. And during the year, Mr. A got a monthly pension of 10,000. He had no other income, so annual income is like 1,20,000. Mrs. A received salary of 20,000 per month from a part-time job, so 20,000 into 12, 2,40,000. Fine. We have to examine the tax implications of each transaction and compute the total income of all the three, that is Mr. A, Mrs. A and their minor child. Okay, so let's get started. Let me take you to next page. Yes. Computation of total income of Mr. A, Mrs. A and their minor sign. Okay. So here I have the table. Let me just extend this a bit. Fine. So look at here, particulars. We have column for Mr. A, Mrs. A and minor son. First, income under the head salaries. We know Mr. A was getting a pension of 10,000 per month and Mrs. A was getting a salary of 20,000 per month. So salary income of Mrs. A, 20,000 into 12, captured under Mrs. A's column, 2,40,000, whereas pension income of Mr. A, 10,000 into 12, that is 1,20,000, is captured under Mr. A's column. Okay, then we can apply the standard deduction under section 16 clause 1a. It is 40,000 for both, so that has been deduction shown with a minus sign. So this is the net income from salary For Mr. A it is 80,000 and Mrs. A it is 2 lakh. But it does not stop with that, because there is some income from house property. For that we have to see note 1. Let's go to note 1. As per section 27 clause 1, if an individual is going to transfer house property to spouse, and if it is not for adequate consideration, okay, or it is in connection with an agreement to live apart, okay, then the person who is transferring, that person will be considered as deemed owner. He'll be considered, or he'll be deemed to be the owner. So in this case, Mr. A has transferred the property without consideration. Actually, he gifted the property to Mrs. A. So whatever the income that arises from that property will be computed only in the hands of Mr. A. Okay. And here the provisions of section 56 subsection 2 clause 10 will not be attracted in the hands of Mrs. A. Why? Because she received the immovable property without consideration from whom? From a relative. So when it is received from relative, it is not taxable. She received this from her husband, so this is not taxable in the hands of Mrs. A, but income derived from that asset will be clubbed in the hands of deemed owner, that is the person who transferred it without adequate consideration. So this income of 52,000, I think we had it in the question, right? What is the rental income? Yeah, here we have the rental income of 52,000 will be clubbed in the hands of the deemed owner, that is Mr. A. Okay, so that has been captured here. Okay, next, there are certain income from other sources. How? See, Mr. A has deposit of 5 lakh. Interest is 9%, but he has given instruction to the bank to credit it to Mr. B, son of his brother, for his education purpose. Now, let's look at note 2. Section 60 says, if there is going to be a transfer of income without transferring the asset, then that income will be considered as income of the transferor only. Here, the fixed deposit interest of 45,000 is transferred by Mr. A to Mr. B. So this will be included in the total income of Mr. A only. So 5 lakh into 9%, that 45,000 will be considered as income of whom? Mr. A only. Okay. Next, there are some commission income, that is Mrs. A received from a firm where Mr. A is having substantial interest. So what are the corresponding provisions? We have to go to note 3. What does note 3 says? Going by section 64 subsection 1 clause 2, if a spouse is going to receive any amount, let's say as an income from any concern where that individual is having a substantial interest. Substantial interest means in case of a company at least 20% voting power, and in case of others, so this is a case of others, that is a partnership firm, at least 20% of the profits of the concern, then that income will be considered only in the total income of that individual, okay, not that of the spouse. The exception is if spouse is going to possess any technical or professional qualification, then that income, and if that income is absolutely attributable to her technical or professional knowledge and experience, clubbing provisions will not apply. But this is not that case. In this case, there is a commission income of 25,000. Who is receiving? Mrs. A is receiving. From which firm? From a partnership firm where he is having substantial interest. Okay, so it has to be included in the income of Mr. A. Why? Because Mrs. A is not possessing any technical or professional qualification for getting that commission, and Mr. A is having substantial interest in that firm. That is, he is holding more than 20%. He is actually having 75% share in the firm. So for these reasons, this should be clubbed in the hands of Mr. A only. So go back. Let's capture that here. Commission received by Mrs. A from a partnership firm in which Mr. A has substantial interest, 25,000. So these two are actually clubbed income. So this 45,000 and 25,000 put together 70,000 income from other sources. Okay, so look at this. Mr. A salary income is 80,000, Mrs. A is 2 lakh, Mr. A income from other sources is 2 lakh 2,000, and Mrs. A do not have anything under income from other sources, so this 2 lakh is coming over here, whereas for Mr. A it is this 80,000 plus 52,000 plus 70,000, 2 lakh 2,000. So this is the income before including income of minus son. So who is having higher income? I think Mr. A. Mr. A 2 lakh 2,000, whereas Mrs. A is only 2 lakh. So what is the rule? If you want to club the income of the minor child, assuming this is the first time it has been clubbed, it should be clubbed only with the income of those parent who is having higher income before clubbing the income of minor children. Mr. A is having higher income. Okay, so look at this. Income of minor son have to be clubbed only in the hands of Mr. A. Okay, what are the income? I think he is getting some income out of investment made in the business from the money received from the dad, right? That is Mr. A. Let's read that once again. Mr. A gifted rupees 2 lakh to his minor son who invested the same in a business, and he derived income of 20,000 from the investment. So this got to be clubbed with the income of Mr. A. But let us also remember the exemption available under section 10 subsection 32, 1,500 per minor child, right? So look at that here. Here we have income of the minor son from investment made in the business out of the amount gifted by Mr. A. We have to look at note 4. If you go by section 64(1)(a), income of minor child should be clubbed with the income of the parent whose total income excluding the minor income is greater, and section 10 subsection 32 says when we include the income of a minor child, then that is when it is included with the income of parent, then there shall be an exemption to the extent of 1,500 per child. So this 20,000 received by minor son from the investment made out of sum gifted by Mr. A should be included after providing for the exemption of 1,500 available under this section. Okay, so it should be included with the income of Mr. A because he is having higher income, and the amount that should be included is 18,500. Okay, only that will be included with Mr. A's income, and we are making an assumption that it is the first year in which clubbing provisions are attracted, and this 2 lakh what is received as gift will not be taxed. Why? Because section 56 subsection 2 clause 10 is not attracted because it is received from relative. Okay, even though it exceeds 50,000, since it is received from relative, that is father, it will not be attracted. Okay, so we'll take only this 18,500 and club with Mr. A's income. So look at here, we are going to club under Mr. A 18,500. Next, son of Mr. A is also earning an income of 20,000 by applying his skill and talent. If you look at note 5, if income is earned by minor child because of applying skill or talent, then it will not be included in the income of the parent, but it will be taxed only in the hands of minor child. So this 20,000 derived by A's minor son through a business activity where he applied skill and talent will not be clubbed in the hands of parent, it will be taxable only in the hands of a minor son. Okay, so this income 20,000 is included only in the hands of minor son. So now we'll add the total income. For A, 2,02,000 plus 18,500, 2,20,500. B, it is 2 lakh only, and for C, it is this 20,000.